but the overall market is under pressure as well. Alan Nuckman's with us, Chief Market Strategist at bullseyeoption.com. Emphasis on the bull. Okay, Alan, so we had a rip-roaring Friday, little bit of a slow start here this morning. What are you thinking about stocks right now?
Well, first, I got a lot to say. I like the fact that you're looking out towards winter because this is a January option. That's plenty of time. We're long, long ways away from that. But tech's not dead. I think I've said this over and over again, and it's just repetition here. We pull back, we find support, and we bounce. So if you look at Apple, Apple's at a 140 level, key support. AMD's at 100, key support. Micron at 70, key support. I look at things on a weekly basis, and looking ahead, we've got earnings season coming up, and the forward PE is actually declining. It's down to 20 now, where it's been at 21, because earnings are up, and expectations of earnings are also up. So there's a lot of positives here in the marketplace.
All right, and with all that, though, you're going to a place where there's some negatives this morning. Twitter is down, I guess maybe related to Donald Trump suing the company. I mean, I guess that's a pretty big deal. We will see. This has been an ongoing point of tension. But it's down 4%, and you're buying the dip.
Yeah, buy the dip, sell the rips. We've been doing this for years. The same old, same old. Now, the NDX is about 5% off its highs made a month ago. It's still up 15% on the year, all right? Same thing with Twitter. Twitter's still up 15% on the year, but it's 25% off its February top. Now, this is a stock that's traded sideways between 60 and the 70 level for 3 months. Now, today it's dipping below that a little bit, but I'm just talking like on a weekly level. We'll look at it. So 3 full months. A breakout of this range targets 80 on the upside. In the bigger picture, it's been trading between 40 and 80. So 60 is the midpoint of the action for the last year. So this is a level to keep an eye on it. And so right now I'm looking at the January 55 call, again, in the money, the stock substitution, or as you guys like to call it, the stock replacement strategy here. Now, the beauty of this January 55 call, again, more than 3 months at a time, number one. So a lot of time for things to develop. We've got earnings ahead, and in the past, we've seen how that's boosted the market over and over again. But more importantly than that is that if the stock just stays here, let's say it doesn't move, because of this particular option in the money, you've got really a 2-month free look on this. It's trading at 10 right now, but if 2 months of time go by, it's still worth nearly 9. So it's something that you get a chip to see if this market does recover and rally like it's done every time in history.
Okay. So, Alan, when you're looking at the stock replacement approach, Twitter's still, if you look at the long term, arguably in some kind of consolidation. It's a weird chart. It doesn't really fit any particular theme or sector trend, just seeing its ups and downs. Very stock-specific story. Does this have event risk in it? How do you manage it if there's some, negative story like this again? Because a lot of times what you'll do is you'll say, the NASDAQ's off a little bit, I want to buy a chip maker, right? Or something like that. And these things move kind of in overall direction with the market. Twitter seems like you could have an asteroid hit at any moment.
Yeah, it's its own animal for sure. Number one, I'm an old grizzled trader, so I'm going to remind people the markets don't care about your politics. So looking at this chart, we played Twitter over and over in the last few years with you, and there are reasons that it just booms. And so it looks like it's set up once again. It's got a nice wedge pattern here where it's made a period of, lower highs and higher lows in the big picture. So again, it's about risk reward. It's 25% off its top. I don't think Twitter's going away anytime soon. So it's a probability play. And the key here is I'm buying more time than usual, over 3 months at a time. I'm looking for something to happen here in the near term. And there's a lot of events obviously coming up between now and the year's end. They can give this be a catalyst and give this stock a boost.
Okay. All right. Buying Twitter with a break even at $66. Looking for some pretty decent upside here. Not shy from taking a shot on Twitter.
Not dead. I got to say it. Sorry.
Well, was it? Say it again.
Tech's not dead yet.
Tech's not dead. Okay. I don't think anybody's really saying it's dead. It's just we see that it goes down when yields are up like today. But this is a separate trend.
Let's remember that. That's not, We're not at 8%. We're not at 6%. We're not 40%. We're at 1.5%.
Okay. All right. Thanks, Alan. Appreciate it. Chief Market Strategist at bullseyeoption.com with the Twitter trade.